everyone needs to be on the same page with what's expected of them, but also the value that they'll get in return by adhering to a certain process or initiative that you're setting up.
So, Dean, let's start off with the first question. So it's a scenario when there's a clear strategy and the related objectives to that strategy are set. Can you talk me through how you visualize that you're on track, and also talk about the story that you're telling? So whether you're discussing strengths, weaknesses, opportunities, and any threats.
Yeah, for sure. So I think it's important, firstly, to kind of understand and agree on how you're going to make that measurement. It's kind of getting ahead and advancing the things that are downstream or upstream in the process that could ultimately create an issue with the way that you're measuring it. So really kind of understanding things like contributing factors, teams, and processes. When you know that, you can better organize the data, arrange it, then present it visually. For us, that could be in terms of aligning to a contribution, from a different demand source, and then ultimately telling the story behind it. So I think kind of to understand that we're on track, it's identifying the method of measurement and all the factors that contribute to it. And then the story behind it is very much the story the data tells. So based on your awareness of how things get added or excluded from those outputs, we can pretty easily make a determination as to what the strengths or the weaknesses might be.
Brilliant. Okay, well, Dean, that leads me on very nicely to tracking. So what are your go-to metrics to help your company understand the performances of your sales team? And do you reckon these metrics are there to show the good and bad? It's there to plant the seed of poor performance that hasn't happened yet, but maybe it's a potential, it's not been realized, but it could potentially happen.
Yeah, absolutely. So kind of the goal for us, if you think of it in the context of a capacity plan or a productivity model, the whole game, the sport operationally is to outcompete the model. So you want ramp times to be shorter, you want reps to achieve higher than the attainment placeholders you've put in as you build out the plan. And really all of that centers around not just kind of the output being performance, but really the early indicators of what that performance might be, and enable you some time to course correct. So I think first of all, the key measures for us always are performance, the output part, the way sellers are measured on their targets. But we walk backwards from that. So if we imagine that on the right-hand side as the final outcome, if we don't see performance, we're looking at pipeline coverage and qualified pipeline coverage. Is there enough in the funnel for that individual rep to get through within the time period that we're interested in, like a fiscal quarter forecast? If we don't see that, we look further back into activity. So are they exhibiting the right levels or volumes of activity and the right types of activity that should contribute to coverage or pipeline? And if we don't see that, we start looking back into enablement programs. So what programs, as you kind of onboard a team or a cohort of sellers, you're trying to understand the different components and the modules that they'll go through. So compared to their cohort, are they doing the same amount of enablement? Are they passing those enablement tests or certifications that are in place? And if they're not, that's an entirely different kind of conversation. But looking at those four things kind of from right and then backwards to left, we're trying to understand if there's a market problem, if there's a seller problem, or if there's a manager problem. And all are fixable. You just need to know which type of problem you're trying to resolve. So from a market problem, it could be that there's a particular country or segment of the market that you're immature in, or you're just opening up. They may well have a different lead time in the market. They might not have all the supporting resources for marketing or for their channel routes to market. So understanding that is key. The data is kind of one thing, the context is the other. So you got to blend the two together. But we're certainly looking on a whole at kind of lower performance indicators so that we can take remedial action like break fix within the enablement cycles and with the managers. and try and impact a change as soon as possible.
I like what you said there about, the data and context are two different things, and it's about marrying it together. That's really cool. Okay, so Dean, at some point, the strategy becomes tactical on the ground with your sales team. How would you describe the approach to this key handover, and who's involved in this process?
Yeah, so really depends on the part of the business that you're trying to impact with the strategy or the initiatives. But in the context of a sales team, it's largely around kind of the accountability. So once we've understood what we're trying to do and how we're going to measure it, it's cascading that accountability down, maybe from a geo or a theatre sales leader through to their regional leaders, and then ultimately down to the reps. Everyone needs to be on the same page with what's expected of them, but also the value that they'll get in return by adhering to a certain process or initiative that you're setting up. So it kind of really starts with the senior stakeholder. For us, that's kind of 4 geos or theatres, continentally split. And then we cascade and align down to each of the levels so that there's kind of reporting built in or measurements that they can go look at for their wider teams, and then down to the rep level so they can understand their franchise or their part of the business. So I guess where we spend the most time is just making sure that the message is articulated consistently but relevant to the audience. And there could be a few different role types included in that process.
Oh, brilliant. So they can understand why they're doing this. But doesn't mean it's always the same message. It relates to who is the person dealing with that message. But overall, the theme has to be very consistent. Yeah,
absolutely. So, I mean, a good example would be, let's say you want to put a health measure on pipeline, and it's an actual calculation, but the calculation is driven by what the reps need to manipulate on an opportunity in Salesforce or in CRM. The benefit to the rep is pretty minimal in that, it's extra work and effort for them, but the accountability is on the manager to have their reps do it for the primary reason of verifying their forecast or verifying the health of the pipeline. So the score in itself, may or may not be important to the rep. The actions that they take are probably not as important to the individual, but for their manager and the health of the business, it's a means of sense checking that we're in the right part of the process. We're getting the right level of maybe engagement with the end customer. And it just adds a means of triangulating the gut feel for forecasting against the health of objective kind of key fields or processes that need to happen.
Oh, fantastic. Okay. So, Dean, what would you say the key leading indicators that you're looking to get a handle on that will tell you what the likely shortfalls are for, just thinking about your company objectives? What are the leading indicators that you want to get a handle on that will show you the likely shortfalls?
Yeah. So, I mean, we operate typically a go-to-market set of indicators, and they're broadly focused firstly at the top of the funnel and how things progress from anything like a lead coming into marketing qualified lead to deal registrations from our channel, down to individual rep activity, so the sales new business meetings that might happen. So what we're trying to do at the beginning of the year before we set targets is reverse back through all of those different conversion metrics by attribution source, meaning by sales, by marketing, or by channel, and working out what the expected conversion rates should be based on historical performance. So we derive the targets like that, and then we set them in stone for the next fiscal period. And what we anticipate then is, on a weekly basis, we can look at the different inflow and make sure that they're going through the stages in the right time, or the different components of the funnel in the right time that will give us the output in the predetermined time frame. So if we get something in at the beginning of the month, will it progress through the stages by the end of the month or the following quarter? So understanding the conversion rate in the context, again, of timing is the important part. So we focus a lot there. When we look down to the middle of the funnel, we're really looking at pipeline progression. So once an opportunity is created and it's qualified, we look at things like stage change analysis. So the period of time elapsed to move from one stage to the other. and also measure that by those different attribution sources, because they will generally be different. And they could also be different by region or country, or by segment. So it's kind of, rather than using your go-to-market indicators model as a global view or a theater-led view, you really need to get down to the lowest common denominator in order to really understand the differences across the region, so that you can affect change in a more targeted way. So we look at that pipeline progression, we set thresholds on things like stuck opportunities, we raise the alarm relative to the risk and the forecast. So if an opportunity is not moving or has been in stage too long, that would be a kind of a red flag to the management chain to maybe not consider it as a certainty for forecasting. And then the third part really is activity on the pipeline that's in the forecast. So we've now got a qualified opportunity. It's come through that go-to-market funnel. It's in the forecast. It's either commit or best case. And we're trying to understand the level of engagement with the end customer to get another level of assurance to say that this is a viable opportunity for the time period. There's always plenty of qualified opportunities that are likely to close, but again, layering in that time factor, we just do another sense check to look at the indicators for us are past performance historically of either the rep, the country, or the segment, and whether they can truly move something from kind of stage 3 to stage 6 in the process in 30 days or 40 days or whatever the measure is. But those would be the three. So go-to-market indicator, overall kind of run rate or throughput through the funnel, how things move through the stages in the process, and then ultimately the activity tied directly to deals in the forecast.
Fantastic. You put that so well. Okay, so Dean, can we go back to the beginning? So when there's a new strategic objective that's been set, what would you say the first 3 things that you do are?
Yeah, other than tear my hair out, I think number one is really try and identify the constituent parts of what the objective is. So, breaking it down, understand all the contributing factors that can influence the outcomes, and just get a clear picture of all of those dynamics. I think that's kind of the first part in order to better prepare yourself for how you're going to go measure this and what potential processes you need to put into place that might not be there already. So it's more like a gap analysis, first of all, than what's a precursor to actually being able to deliver against it. I think number 2 is, understand the impact of the measurement. That is, it's probably more to do with frequency. So once you set the measurements in place, what's the right cadence to look at it? If you're looking at certain things across a shorter amount of time, you see very little in the way of, variable or improvement, positive or negative. But it's the length of period that you go measure something against that's going to derive the most kind of return to sense check whether you're on track with those objectives. And maybe the third one is really confirm that your current systems and processes are aligned and possible to support the objectives, they're effective. I think this maybe talks back to number 1 as well, but you set the measure, you just need to confirm that you've got the tooling in place to be able to, reasonably get that at the frequency that you need. So those 3 things, maybe number 1 is the most important though, just breaking it down and understanding the gaps.
Okay, so the first is pulling your hair out. The second is identifying gaps, alignment, and just making sure, going back, reiterating the first part of is the tools, are the systems, are the processes in place that will identify how effective, how big these gaps are, just digging a little bit deeper and trying to figure out where the gaps are and how much time have you spent tracking all this information to see if those gaps are really gaps in the first place.
Yes. Yeah, exactly that. And it's just important to be aligned. The systems and tooling generally are pretty aligned already, but there's always an outlier, and it's kind of capturing that as soon as possible that avoids the rework, further down the line when you've got actual data flowing through this objective that you're trying to measure, and then there's a significant change to the output. I think it's just kind of avoiding that, or trying to avoid that.
Well, okay, Dean, last question for you then. So can you tell me about a time where tactically it went wrong, and when did you realize this? Did you use any data to help you realize this, and what did you do to overcome that?
Yeah, I mean, I think we get it wrong a lot, and kind of the benefit of our types of roles are that you can fail pretty quickly and learn from it. As long as you learn from it and implement change, then it's moving the business forward. So I think a typical problem people in my role, or maybe in a more of a regional role, come up against are like this general concept of a template, like a global template for planning, global template for go-to-market indicators, all of those things. It's where you basically take the nuance out of the region or the country or the segment, the market that you're addressing, and you kind of layer over the top just some generic measurement that works in one part of the business. I think kind of where I've got that wrong is maybe not pushing back soon enough and inheriting those templates. And what you can see in the data very quickly is that you're always behind the pace. If you're let's say you're a US company that are very strong in the home market, and you're now setting up in Europe or Asia, the likely go-to-market metrics are going to be pretty different. You're not going to have the supporting structure. You've got language challenges, different channel relationships based on country versus this, large mass, land mass in the US. And within the data, you can see that you're tracking behind your counterparts pretty quickly. So the usual things that crop up from that are things like time to hire. Like the global templates usually assume you're on an American or a US centric hiring pattern. Like employment at will, you can start and leave in 2 weeks, whereas certain parts of Europe and Asia have up to 6 months based on notice periods, and really understanding those lead times to hire can impact things like the productive output that you might get. I think lead volumes and conversions as well, depending on the maturity of the market or the marketing within the market, can also reduce your conversion, reduce the sheer volume that you get in those parts. And then progressing the deals, going back to the key metrics that we were talking about, the deals generally are going to flow more slowly in newer markets that haven't had the support or the brand awareness or the routes to market established. So it's kind of, I think, learning from that and understanding that those nuances exist, and then in the understanding that those things exist, actually leverage the data for each of the regions or each of the nuanced parts of the business into your planning cycles, so that you're actually looking at historical fact or more conservative assumptions in some of those markets, help you keep pace with the way that you write the plan going forward. So yeah, I think that's one of many mistakes, but it's a pretty big one.